Hello and welcome to this analysis. Now we've seen the market correct pretty sharply in the last 45 days. Uh, September 27th being the high in the Nifty, and from there quite a steep correction. Today's video is trying to analyze various other sectors, because almost everything has been damaged very heavily from the highs. So we're selecting around seven of them. Two of them are the sector in large cap and Nifty Junior and Nifty Mid Cap Select. Rest are sectors, various sectors I've picked up where I could see some analysis. So starting with the Nifty Junior, that is the Nifty Next 50, we can see that in this case the in as per Ichimoku, the monthly baseline is completely flat, which led to a sideways to pull back, first initial pullback. Now let's see whether it will be sideways or whether it will further pull it down further down towards the baseline, which Ichimoku, as per study, the baseline does have that magnetic pullback. Now let's have a look at the weekly broken below the baseline. You can see from the week of October 21st, 3 weeks it tried to hold on to this level. From there, it has given up and given a sharp downward move from there. Let's have a look at the daily of the Nifty Junior. And here, as per Elliott wave theory, we are coming to the probably, if it is a five wave down, then we are coming very close to the end of a fifth down. Now, for those new to Elliott wave, in Elliott wave theory, when you have a five up, it is followed by a ABC down, a counter trend, or when you have a five down, then you have a pullback, provided the phi down is a wave and not a C wave. Now, in this case, I am more inclined to see it as a wave down, not as a C wave. So this could be a first leg of the correction which we are seeing coming to an end in the Nifty Junior, somewhere around 66,000. From here, we could see a pullback. That pullback could go, I till in Elliott wave, the pullback can even go up to the highs, but there is no mandatory rule or guarantee of that sort. So we will see how the structure plays out, whether the pullback ends at 70,000 or somewhere near 76,000, but a pullback could be coming. But one should keep in mind that next week we have a truncated week due to elections in Maharashtra, and then we have the settlement week. So only 8 trading sessions left for this settlement. So we could see a move which could be, even if it turns around from the current level or the 66,000 level which I am looking at, we could see a truncated next 2 weeks, even from a bullish point of view, and then probably a up move like this could take place for a pullback. Definitely, I would be looking for a lower high structure in the junior Nifty Junior, not a new high. So opportunity should come, and you can see out here right from July of 24, this level of 71,000 did try to protect it three on three occasions. That is July, again August, and again in October early before it broke down. So one should keep this level as a very big resistance going forward in the Nifty Junior. So in short term, one stop of the decline, the first round of decline might be coming to an end, and then some consolidation and a bounce back possible. Failure to hold 66 would mean that it would try to come down to 60,000, which is the election result fractal formation. Now let's have a look at the Nifty Mid Cap Select. First, let me start with the monthly. Very little data out here. Again, a flat baseline, magnetic pull of the Ichimoku pulling it down towards it. Let's have a look at the weekly. Very, very close to the baseline now. Extremely close to the baseline, which is a good support. And you can see that from the time the rally really began in the mid cap select index, you can see the movement coming. And remember, on Monday is the last weekly expiry settlement of the mid cap select. Henceforth, it will only be monthly option or future like that, expiring on last Monday of every month. Now, very, very close to its Ichimoku baseline support out here. Let's have a look at the daily. Daily has a bullish Harmonic alt sharp coming up at 11,700 odd levels, which is almost very close to the weekly Ichimoku baseline. So that's the level one should be looking for. If you are short in the index and you are looking to cover, that would be a good area to look for, booking shorts, and also look for a reversal signal again in this case also, because the overall market trend appears to be a bit wobbly and downward overall. So initial bounce back target should be, somewhere close to 12,000 from that 11,750 odd area. Again, if this 11,750 bullish alt harmonic alt bat, sorry, not alt shark, alt bat, does not hold, then we are again looking for much lower levels towards 11,000 to 10,600 odd levels in the coming days. So keep these levels in mind in the mid cap select index also. Next one is now a sector-based indexes we are seeing, starting with the commodity index. Now look at the beauty of the commodity index. First, this breakout of January 18, 2 years decline, and then a very very sharp breakout in March 21. Very little pullback, more of a sideways correction between April 22 and Feb 23. Then a beautiful rally. So the index, the commodity index, did not see any pullback for 18 months, and that's what we are seeing now. Again, look at the flat baseline pulling prices towards it, magnetic impact out here. Let's have a look at the weekly at the Ichimoku cloud support. Future Kumo is still bullish, so a probable pause can come in the decline close to this level out here. If a failure to hold the cloud would mean further downward movements towards 7,600. Let's have a look at the daily, and we have a bullish harmonic shark coming up very very close to that weekly cloud also, where we are right now at 8275 odd levels. So again an index which, where this sharp downward move which we are seeing from end September might, the first round of selling is how I would like to put it for now. Will whether it may goes on to rally to make a new high, that we can review later. For now, because the larger market scenario looks, several higher time frame levels have been breached, we should only look first for a bounce and then look for probably new, and keep trailing if it does well. So that's the level I'll be looking for, 8,275 300 odd levels out here. Failure to hold 8,100, which is the June 4th low, would be bad for the commodity index, which would push it further down towards 7,600 and maybe further lower at to this level. So watch out for that level. What kind of a bounce would I be looking at in this one? Would be something to the extent of right, all the way back here at 8,850, or maybe towards this level of 9,000. Those are the levels we should be looking for. The next one, the energy index. You can see in the energy index again in the monthly a flat baseline. Now this flat baseline is something one should, those who know are aware of Ichimoku, or those who are learning are taking observing it. A flat baseline stops the trend, whether it is an uptrend or a downtrend, whatever. It pulls prices towards it, magnetic impact, and that's what it has done. You can see actually from August the energy index started underperforming the market because of a flat baseline in the monthly. Weekly has just penetrated the cloud out here, very, very close to the June 4th fractal out here. You can see that. Let's have a look at the daily. In the daily here also, we have a bullish harmonic alt bat coming up, much lower levels, 35,200 odd levels. Not necessary that we might see it. It could also, this index could also do something like this now, keeping the sentiment of the market in mind. A pullback like this, and then probably a pull back down like this to complete this target. That this particular harmonic at 35,250 odd would only, in my reading, happen if the 36,900 level is breached. 30, because you can see out here in March it held on to this level. Here also just the wicks are down in the daily time frame, but it has held on to that level out here. Here also you can see a little bit of consolidation in January. So breach of 36,900 would pull it further down to 35,000. So energy stocks, the index is largely dependent on Reliance and then the OMCs. So if you see further weakness in the heavyweight, then you know which level to look out for. Else you can expect a bounce if 35,900 holds. Again, I would be waiting for some green candle to come before I attempt a bounce in any of the indexes which I have mentioned. Else, I would just sit quietly. At least 1 or 2 hourly green candle follow throughs required before we consider it anything meaningful. Let's have a look at the infrastructure uh, index. Again, a beauty of an index. You can see what a fantastic breakout in Jan 21. A lengthy period of sideways market. You can see a double bottom in the monthly, the 2008 and 2013 lows, and then a bullish dragon harmonic breakout which completed its target, went on to surge and meaningful correction for the first time after April 23 taking place. Again, the Ichimoku baseline, ruling the trend out here and trying to push it down. Let's look at a weekly coming very close to the Ichimoku uh, baseline support out here. Let's have a look at the daily. Daily, again, another bullish harmonic pattern, a deep crab, likely formation near 8,300 odd levels. Not necessary that it will come to 8,300 odd, but the probability of that level trying to hold the first this round of decline, very much possible in the case of the infrastructure sector. You can see previously a bullish harmonic reciprocal ABCD which beautifully gave another rally. Let's see if we get another rally here. For now, 8,675. This is where the you can see a lot of consolidation happened before it broke down for 2 weeks. So once it manages to take out this 8,700 odd level, will it try to go back to 9,000 odd? And here you can see not a very clear head and shoulder, but a unorthodox one. Trend line breakdown took place out here. So that's the levels I will be looking forward to if there is a bounce in the infrastructure index, whether it comes from 8,300 or it comes from here. These are the levels one should be looking at near 9,000 odd. There's a gap down also in the index at 9,500, which is a big resistance going forward. Next one is the IT index. Now, IT index has held the market and it's held it beautifully well so far. And at all time high, almost just a little bit of blip from the all time high. But one should keep in mind that yesterday, 15 November, Friday, the NASDAQ index has given a bearish island reversal. And if NASDAQ shivers, so do the IT stocks. And in the weekly, now you can see a beautiful double bottom breakout which has done its target. Again, the Ichimoku baseline, you can see how beautifully the baseline has done its job and not let the index go. Yes, it has tried its best to control the damage what the other heavyweights have done. IT has held on very strongly and pushing its way back up from here. Now let's have a look at the daily, and interestingly, in the daily on the 12th of November, this trend line resistance out here from its all-time high made in September 17 has seen a rejection from there currently. So unless the IT index breaks above this trend line at 43,000 to 43 325 350, upside could wait. Either it'll do some consolidation before a breakout attempt again towards another new high. So it's important to know that if we get a weekly close above 43,500 weekly, I will not go by daily for the current time being because of the overall market sentiment. If it does that, then the next upside target for the IT index is close to 47,000. So that's the strength the index has currently. But if we are looking at a trend line rejection out here, then a downward move can come till 41,700 to all the way down cover this gap up area. Now, surprisingly, a strong index, the IT index, it has done very few gaps this time. The whole rally has been, right throughout the day of the market, except this one gap up on 19th of August. After that, nothing. So that's the strength the IT index has, not surprising overnight, but during the market surging ahead. It's a strong index thing. Now, the last one is the Pharma index. Again, another beauty of an index which has done superbly well, but it has felt heavy jitters since October, and especially since November 5th with the new US administration, because there is fear of changing in FDA norms which will impact the Indian companies which are into, dependent on US pharma markets. So the damage has come from there, and it continues to, wobble. You can see again the monthly, the baseline just flat, not letting the trend line push ahead. Look at the weekly baseline flat, and look at it from September. The index went completely flat. Yes, while other stocks were getting damaged, the pharma index was going sideways, 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 non-stop. And now the pullback has come towards the baseline, the magnetic pull, and sharp down move is what we have seen in the weekly. Now let's have a look at the daily and see what we can decipher out here. Here also, as per the Elliott wave theory, we have a phi down in pharma. Now when I say a phi down in pharma, in this case also I am going to hold this phi down as the first leg of correction in pharma, which is may have ended or is about to end very close. The first round of selling, we could have a second, a counter trend corrective pullback, maybe till 23,000 or a little bit more out there, and then another round of selling could come in pharma. So pharma in the short term, probably a smallish bounce back possible, but in the medium term, a longer correction overall possible in the case of the pharma index also. So overall, that's the view I hold in the market currently. Now, please note, this is not a trading advice to you. This is just an educational video based on the studies of Ichimoku, harmonic trading patterns, and Elliott wave. Kindly do your study thoroughly before you take your trading and investing decisions. And also, if you like this video, please do like it, share it, and do follow me for regular stock and index ideas. Until then, happy investing.